Hi, Biconomy friends. If you thought last week was wild, buckle up. We're talking record-breaking markets, ambitious ETF filings, and even quantum computing fears in the crypto world. In this week's recap, we'll unpack a Japanese political shock that pushed the Nikkei to new highs, new moves from regulators in Canada and the US, and why tokenized gold is getting a $150 million boost. Let's jump in. Before diving into the headlines, let's set the stage. As of February 9, Bitcoin is hovering around $70,000. Ethereum trades near $2,000, while Solana sits around $85. XRP has been resilient, changing hands at roughly $1.45. These price levels suggest cautious optimism after a 10% recovery from a swift drop earlier this month. Let's start with regulation. Canada's Investment Regulatory Organization, CSIRO, released an interim crypto custody framework designed to protect investors while permanent rules are drafted. Dealer members must now hold client crypto either with CSIRO-approved custodians or via in-house custody that meets baseline standards. This measured approach signals Canada's cautious path towards mainstream crypto adoption and should provide institutional players with clearer guardrails. A macro backdrop fuels risk appetite. The Federal Reserve's M2 money supply reached a new high of $22.58 trillion in December 2025, the latest data available as of January 27, 2026. The broad measure of U.S. liquidity has been rising steadily August through December last year, and this flood of money often finds its way into equities, precious metals, and of course crypto. With the next release due on February 24, investors are watching to see whether liquidity continues to expand, a key driver for risk-on sentiment. Japanese elections triggers market euphoria. Prime Minister Sanai Takaichi secured a supermajority in Sunday's general election. The decisive mandate ignited what traders dubbed the Takaichi trade. Japan's Nikkei 225 index jumped 3.4%, reaching 57,000 for the first time as markets priced in a $135 billion stimulus plan featuring infrastructure spending and tax cuts. The move didn't stay contained. Gold surged past $5,000 per ounce, and Bitcoin briefly spiked to $72,000. US futures opened higher, and President Trump congratulated Takaichi, expressing hopes for a 100,000 points Dow. Back in North America, asset manager Bitwise shook things up by filing a Form S-1 registration statement with the US Securities and Exchange Commission, SEC, on February 5th for a spot Uniswap ETF. The proposed product, which would hold Uni tokens directly, could become the first regulated exchange-traded fund focusing on a DeFi protocol if approved. Despite the filing, Uni's price slipped, a reminder that the Web3 industry matured to only be affected by massive global news. Stablecoin issuer Tether took a different route to diversification. Tether Investments announced it would acquire roughly 12% of Gold.com in a $150 million deal. The partnership aims to integrate Tether's gold-backed digital asset, ZAOT, into Gold.com's platform and could allow customers to buy physical gold using Tether's USDT or USAT stablecoins. The timing is notable. Gold prices have recently crossed the $5,000 level, and the gold-backed stablecoin market has tripled in the past year, with ZAOT capturing more than 60% of the sector's market cap. Quantum computing has long been cited as an existential threat to Bitcoin's cryptography, but new research from CoinShares suggests the risk is far smaller than headlines imply. Responding to a study that claimed 20 to 50% of BTC could be vulnerable, CoinShares noted that only about 10,200 BTC are stored in accounts large enough for a quantum breach to materially impact the market, even if attackers targeted those coins. Breaking current cryptography would require a quantum computer with 13 million physical qubits, roughly 100 times more powerful than today's machines. In other words, quantum threats remain largely theoretical, and incremental engineering upgrades can mitigate them. Prediction market platform Polymarket also made headlines as its parent company, Blocketize, filed U.S. trademark applications for Poly and $Poly. Executives confirmed plans to launch a native token and conduct an airdrop, although no launch date has been disclosed. If executed well, a token could incentivize liquidity providers and traders, but regulatory clarity around prediction markets remain an ongoing challenge. From regulatory frameworks and macro liquidity to election-driven market shocks, and the race to launch new tokenized products, last week demonstrated how intertwined global politics and finance have become with the crypto industry. As always, keep an eye on liquidity trends and regulatory signals, and remember that technological fears like quantum risk often take years to materialize. Thank you for watching. I will see you next week.